Hey traders, TG Watkins here. It is February 5th when I'm recording this, and as you guys can see, I've got some new background art going on here, background color. I've been remodeling the house, which also includes the office, and it's a little bit of a messy zone around here. You guys can only see what's actually on the camera, but I'm going to be working on this backdrop, and it should be better. We got a new camera and everything else like that, so should be pretty fun as we get this really dialed in and see where we can go with it. All right, so come over here to my Twitter page, and the last thing I left off with was basically how we're navigating the IWM. And so what that means is we were looking for the IWM to move up, which it did, but then it sold off from there after the FOMC. So that's kind of been the thing I think is showing us that basically the markets, except for NVIDIA, SMCI, Meta, and Amazon that went up over the last week, we're starting to see fewer names participate on the upside as we see the indices start to move down. And what we could see here was originally we had the IWM bounce off the hourly 50 and move up. But as you guys can see in the Twitter post, I started to see concern about that and say, hey, I think we should watch out. This might actually be a fake out move to the upside. And sure enough, there's where price started to get back underneath the 15-minute 50 and move down. And I said, well, ultimately this might move like the first part of Airbnb where we thought maybe it's going to come back down and do a double bottom. So it's doing that for now. It might go further. We have no idea, but it is moving down until otherwise. And part of what we can do is look at here and we'll check out the breadth. So the breadth is starting to get kind of narrow. And what that means is fewer and fewer stocks are continuing to participate in this rally to the upside. So we did get a bit of a bump here with the number of stocks over their 20-day SMA, but that's starting to burn off too. Now the whole time, the number of stocks over their 50-day SMA started to burn off. There was an area right in through here where it actually went level for a bit, but it never went up. So that has been in a downtrend, and we can see that we're now putting in kind of a negative divergence even on the 200-day, which is the same as the monthly 10. So the market is pretty high up there. Let me even just go back and show you one other thing. If we look at the higher time frame of even just the SPY, and we can see here that the market is pretty darn extended up there. So, and that's great, but it's only being held up by a handful of the biggest stocks, and it's getting to a point where it's like, that's getting a little bit rough to want to continue to stay long up there. So we do need to be careful. I guess also the other thing I'll point out as we are here is that the TNX, and I find this to be very interesting, the TNX sold off, which really helped the market move up. And then I was looking for it to run into the underside of the daily 50 and move down, which it did. But then now it's coming back up. So we got the rejection here at the daily 50. But then look at this. There's your double bottom, and it is right back up. So now this could end up being a bit of a trading range. We're not quite sure yet. But it is very interesting to see that we got the rejection. But now it did find some support, and it's actually moving back up. And we have to think maybe this is correlated to how the FOMC and Jerome Powell said, hey, maybe higher for longer. All right, guys, thanks again, and we'll see you at the next one. Hey, TG here with Simpler Trading. Thanks for watching. If you enjoyed this video, be sure to leave a like or comment below. Also, make sure to subscribe and click that notification bell so you can stay up to date with my market analysis. Or you can join my free newsletter with the link in the description. Good trading, and I'll see you at the next video.